Welcome students. ICAI has issued RTP for May 2017 and in that, in all there are 9 case laws. This video lecture is to explain you those 9 case laws. In this, there are 3 case laws for excise, 5 case laws for service tax and 1 case law for customs. So let us start studying them one by one. The first case law is Dhunasri Petrochem Limited 2016, and please understand this is not a case law, this is ruling, advance ruling. So you can understand somebody, a specified person is planning to start an activity, and even before he starts the activity he wants to understand his tax liabilities in India, and that is advance ruling. So this is decision pronounced by authority of advance ruling. The question is whether crushing of coal and supplying it to clients, whether that activity amounts to manufacture for the purpose of Central Excise Act. The assessee was going to import the coal was going to be in different shapes, and then he is going to crush it and then it is going to supply it to his buyers. Whether this activity of crushing the coal, whether it amounts to manufacture. And we are already experts of this. What do you mean by manufacture? Manufacture is change, but every change is not manufacture. You require something more. That is called as transformation, and transformation such that input and final product differs in terms of name, characteristics and use. Here, even after crushing, the characteristics of coal have not changed. Neither the end use had changed. So, obviously, the activity does not amount to manufacture, and that is the ruling. The activity of crushing the coal would not be covered as manufacturing activity, as it is well understood that even after crushing the coal does not lose its character, nor does it become a new product. Neither the coal crushing activity would amount to manufacturing activity, nor the crushed coal would be a manufactured product. That is the decision, that is the pronouncement by advance ruling. This is Dhunasri Petrochem Limited 2016, authority of advance ruling. As you know, whatever SINVAT credit has been availed should be utilized for permissible liabilities. If you are not able to utilize the SINVAT credit, you can carry it forward, and there is no time limit for how much time you can carry forward SINVAT credit. But normally, refund of SINVAT credit is not given. That is the normal rule. But into this normal rule, there are 3 exceptions in SINVAT credit. One is Rule 5, that is export assessee. Second is Rule 5A, that is area-based exemption person. And third is Rule 5B, that is a partial reverse charge person. Here, the case law is in relation to Rule 5 of SINVAT credit rules. And the name of the case law is Tavant Technologies India Private Limited 2016, Karnataka. The question is, if there is unutilized SINVAT credit and it is an export assessee, then sure that Rule 5 of SINVAT credit rule is applicable and unutilized SINVAT credit should be refunded to such an assessee. But is it compulsory that assessee, so as to claim the refund under Rule 5 of SINVAT credit rule, should be registered under Excise Act? And the answer is no. We have learnt Rule 5 of SINVAT credit rule completely. There the procedure is laid down, the conditions is laid down, but in Rule 5 basically nowhere it is written that for claiming refund of SINVAT credit under Rule 5 of SINVAT credit rules, registration of an assessee under excise is a precondition. Nowhere it is written. Obviously the answer is the same. The court has given the answer. There is no statutory provision under SINVAT credit rules 2004 which makes registration mandatory and which stipulates that a person would not be entitled to benefit of refund under these rules if he is not registered. Thus, refund claim cannot be rejected on the basis which does not exist. If there was a precondition well written in the rule that for getting refund registration is compulsory, then it will become basis for rejection of the refund. But in the absence of that, on the basis which does not exist in the law, refund cannot be rejected. Thus, revenue was not able to show any provisions under Rule 5 of Syndicated Credit Rules 2004, which provides for registration with the department as a condition precedent for claiming refund under the said rule. There is no precondition written in the Rule 5, and neither department was able to show such precondition to the judge. Obviously, then refund will be granted. That is Tavant Technologies India Private Limited, 2016, Karnataka. Next case law is Everready Industries India Limited, 2016, Madras. A very simple case law actually. Is it possible that Deputy Commissioner allows refund under 11B2 of Central Excise Act, and simultaneously for the same case, Assistant Commissioner starts recovery proceedings under 11A1. Is it possible? First, let me remind you the sections. If assessor is of the opinion that some refund is due to him, then under 11B1, he will make application for refund. We know if assessor is of the opinion that some refund is due to him, in form number R, within 1 year from relevant date, under section 11B1, he is supposed to make an application for refund to appropriate authority, which is Assistant Commissioner or Deputy Commissioner. After considering the assessor's application, and if the officer is of the opinion that refund is due, and if doctrine of unjust enrichment is not applicable, he will pass an order under 11B2 and give refund to the assessee. So, on one hand, for example, Deputy Commissioner considers the application made by assessee under 11B1, and because he is convinced that refund is due, he has made a refund order under 11B2. But at the same time, Assistant Commissioner is offended and he is of the opinion that it was erroneous refund. Can he start proceedings under 11A1? If you remember, under 11A1, show cause notice can be issued by Central Excise Officer if it was non-payment, non-levy non-payment, short levy short payment, or erroneous refund. So, to start proceeding under 11A1, first of all, it has to be held erroneous refund. Then only proceedings under 11A1 can be started. Now, please understand, normally how the refund will be held erroneous. There will be two possibilities. I'll repeat. Assessee has made application under 11B1 because he is of the opinion that some refund is due to him. Officer considered his application and he is convinced, he is totally satisfied that refund is due. So, he has made order under 11B2 and he has given refund to the assessee. It's an adjudication order. It is an order passed by the officer that refund is due. So, this is in the nature of adjudication order. But as you know, this order will be subject to a review. So, it goes to the commissioner. As you know, if it is adjudication order passed by lower level authority, review will be done by commissioner under section 35E. When doing the review, if commissioner is of the opinion that this refund is prejudice to the interest of the revenue, he will mark that case back to the officer. And against his order himself, officer will go to commissioner appeal. Commissioner appeal will give the decision and review is complete. Suppose commissioner appeal says, in the review, that refund was erroneous. Now, proceedings can be started under 11A1. So, I will repeat this once again. Officer passed refund order under 11B2, but under review, commissioner thought that this refund is prejudice to the interest of the revenue. He marked that order back to the officer. Against his own order, officer goes to the commissioner appeal and commissioner appeal holds that this is an erroneous refund. Then officer can start recovery proceedings under 11A1. That is one possibility. Second possibility is that sooner or later officer realizes that refund was sought by the assessee by fraud. some misrepresentation was given, some suppression of fact was involved, some collusion was involved, and officer has realized that whatever refund he has given was erroneous. Still, he can start proceedings under 11A1 by issue of show cause notice for recovery of such refund given. But if none of these two events have happened, is it possible that simultaneously one officer grants the refund and second officer starts the recovery proceedings for recovery of erroneous refund? That is not acceptable. That is the case law. It was held in Eveready Industries India Limited, 2016 Madras. If assessee is of the opinion that some refund is due, he will make application for refund under section 11B1. Central Excise Officer, if he is of the opinion that refund is due, then he will pass the order for refund under 11B2. The power exercised under section 11B is that of an adjudicating authority, and the order passed is certainly one of the adjudication. Now, for issue of show cause notice under section 11A for recovery of erroneous refund possible, there are only two situations. One is the review situation, or another situation is the situation where officer has realized that refund was sought by the assessee by fraud, suppression of facts, etc. But if none of the two events have happened, then on one hand, one officer giving refund under 11B2 and second officer starting recovery proceedings under 11A1 is not acceptable. That is the decision. Please read Eveready Industries India Limited, 2016 Madras. Next case law is again an advance ruling. It is Universal Services India Private Limited, 2016, and it's an advance ruling. A very interesting case law. The basic discussion is about whether the services provided by assessee, namely Universal Services Limited, whether which POP rule is applicable, whether it is intermediary services or whether it is principal to principal services. That is the question. First, let us understand the transaction. WWD is a USA based company. They are in a business of services, provisioning of services in relation to web designing, web hosting and related services. So, all over the world, any service receiver wants these services. That is the service WWD USA is providing. They are providing all over the world services of web designing and related services. Now, for example, there is a customer in India. Here, WWD USA has provided service to service receiver in India. So, who is the service provider? WWD USA. Who is the service receiver? The customer in India. And what is the service provided? Web designing and related services. Now, when service receiver wants to make a payment, he has two options. One option, by using his own credit card in convertible foreign exchange, he can pay. But you have one more option. You can also pay the amount in Indian rupees. WWD USA has appointed Universal Services Limited for collection of the payment. Suppose some service receiver wants to pay in Indian rupees. He will give that amount to Universal Services. Suppose the service charge was $1,000. Then amount equal to $1,000 service receiver will pay to Universal Services Limited, and entire amount $1,000 converted into foreign exchange, they will remit it to WWD USA. So they are not keeping any margin in that. Whatever amount they have received from service receiver, it will be received in Indian rupees by Universal Services. They will convert it into foreign exchange and they will remit it to WWD USA. In this process, suppose Universal Services incurs total cost of 1,000 rupees for providing this service of receiving the rupees and remitting it entire amount. Suppose Universal Services Limited has incurred total cost of 1,000. They will make markup of 13%, that is another 130 rupees, and they will charge 1,130 as fees to WWD USA. Now, here, who is the service provider? Service provider is Universal Services Limited. Who is the service receiver? WWD USA. What is the service provided? The service provided is collection of money and remittance thereof. This has nothing to do with the main service of web designing. Universal Services Limited are not helping WWD USA in providing the main service. It has nothing to do with the provisioning of main service. It is a service provided of collection of amount and remittance thereof. So, whether Rule 9 is applicable, that is, whether Universal Services Limited should be treated as intermediary or it is Rule 3. That means it is P2P relationship. If it is Rule 3, it is P2P relationship, and if it is Rule 9, it is A to P relationship. Agent to principal, principal to principal. What do you think? And this is a very simple, this has nothing to do, service provided by Universal Services Limited has nothing to do with the main service. It is entirely different service which is provided on principal to principal basis. Universal Services Limited are not agents of WWD USA for providing the basic web designing services. They have nothing to do with the main service. It is entirely a different service provided. What is the service provided? Collection of money and remittance thereof, for which charge has been made. It's P2P relationship and not an intermediary. So Rule 9 is not applicable and Rule 3 is applicable. Also, whether this will amount to export of service as per Rule 6A of Service Tax Rules. What do you mean by export of service as per Rule 6A of Service Tax Rules? What are the constituents? We are experts of that. Service provider should be from taxable territory. Service receiver should be from outside India. POP of this transaction should be outside India. A service provided should be a non-negative service. Service provider and service receiver should be genuinely separate persons, and they should not be deemed separate persons as per explanation 3 to the definition of service, and consideration should be received in convertible foreign exchange. Here in this case, all those constituents are present. So, service provided will amount to export of service as per Rule 6A of Service Tax Rules. Just understand, Universal Services Limited, the service provider, is from taxable territory. WWD is a USA based company which is outside India. Because Rule 3 is applicable, Rule 3 answer is location of service receiver. So POP is outside India. Service is collection of money and remittance thereof, which is nowhere mentioned as non-negative service, and whatever charges, in my example 1130 rupees is received by Universal Services in convertible foreign exchange. So this absolutely amounts to export of service as per Rule 6A of Service Tax Rules. So here basically in this case law, Universal Services India Private Limited 2016, two issues have been discussed. Whether service provided by Universal Services India Private Limited are in the capacity of intermediary, answer is no. It is P2P relationship. Rule 9 of POP rule is not applicable. Rule 3 of POP rule is applicable. Second question, whether service provided by Universal Services India Private Limited amounts to export of service as per Rule 6A of Service Tax Rules, and the answer is yes, that is the advance ruling. Next case law is Federation of Hotels and Restaurant Association India 2016. Again and again we have studied this issue involved, and actually we are experts of this, but once more let us try to study this. The question is 66EI and Rule 2C, whether they are constitutionally valid. एक बार याद करते हैं, you went to restaurant with your family and you have had dinner there and total bill is 3000 rupees. Now we know that this is a composite contract. Article 366(29)AF of the Constitution has recognized the sale portion of it. and the article says that to the extent of value and food and drinks involved, it is deemed sale. But point is true that by article 366(29)(a), what is covered is not entire contract. Only what is covered, only what is deemed sale is the value of food and drinks that have been deemed sold, on which VAT will become payable because it is deemed sale as per the constitution. 66(e) I has declared the balance portion as a declared service, and valuation rule 2C has been made to decide the value of this. So as per section 66(e)(I), the balance portion is a declared service on which central government should collect service tax. Whether 66(e)(I) is constitutionally valid and whether rule 2C is also constitutionally valid, that is the question. And here I have given the answer in forms of some points so that it becomes very easy to remember. First point, I say, whenever food and drinks are supplied along with some service, it is certainly a composite contract. My point is, if food and drinks are supplied along with some service, certainly it is a composite contract. There is no doubt about it. Second point, I have said that what article 366(29)(a)(f) has said, has it said that entire contract is deemed sale, or has it said that it is deemed sale only to the extent of foods and drinks sold? The answer is the second part. Article 366(29)(a)(f) never said that entire contract is deemed sale. It is saying that it is deemed sale only to the extent of value of food and drinks that are deemed sold. That is the second point. Third point is very important point, by pith and substance doctrine. I want to explain you what is this doctrine all about. In Constitution, there is Schedule 7. Schedule 7 has List 1, List 2 and List 3. What is List 1? Central government power to collect taxes. What is List 2? State government power to collect taxes. And these three is called as concurrent list. There are some items where central as well as state government can collect taxes. Now, a particular contract, whether it is covered by List 1 or List 2, when that is the question, the answer is given by pith and substance theory. When two entries, when List 1 and List 2, there is a war between List 1 and List 2, that particular contract is covered under whether List 1 or List 2. The answer will be given by pith and substance theory. So here the court has said, when you apply pith and substance doctrine on this contract, certainly service has supremacy. So rather it is covered under List 2. So in the third point I have written, by pith and substance doctrine, the manner of service provided assumes predominance over providing food, which is definite indicator of supremacy of service aspect. In this composite contract, if it was to be decided which entry has supremacy, whether entry number 1, that is central government's power to collect taxes, or entry number 2, whether state government power to collect VAT, certainly by pith and substance theory on this contract, service portion has the supremacy. Having said that, there is no doubt that there is a service component involved. Fourth point, Parliament has made section 66(e), and specifically we have declared that the balance portion is declared service, so it is constitutionally valid. Now that we have said that service has a supremacy in this contract, then Parliament, by creating a legal fiction 66(e)(I), has said that a part of it is declared service, and then so as to value that, Rule 2C has been made. Rule 2C says that if it is restaurant, then it is 40% value, and if it is outdoor catering, then it is 60% value. Whether Rule 2C is constitutionally valid, and the answer is yes, because section 94 of Finance Act has given powers to central government to make rules for deciding the value, and Rule 2C derives its power from section number 94. Having read all this discussion, there is no doubt that 66EI is constitutionally valid and Rule 2C is also constitutionally valid. That is the decision. The decision is in the case law of Federation of Hotel and Restaurants Association of India, 2016, Delhi. And the final conclusion, the Parliament has made the legal position explicit by inserting section 66EI, declared service, where they have said in that composite contract there is service and it's a declared service, and they have made Rule 2C to correctly value that also. So High Court upheld the constitutional validity of section 66EI of the Finance Act 1994, read with 65B22 and 65B44 thereof, and Rule 2C of Service Tax Valuation Rules. That is the decision, Federation of Hotels and Restaurants Association of India, 2016, Delhi. Next case law is Suresh Kumar Bansal, 2016, Delhi, and it is most important and expected case law. This case law has changed the way we used to think about construction service, and the issues raised in this case law, they have been now amended by Finance Act 2017. Anyway, Finance Act 2017 is not applicable to us. So how this case law has been overruled, that let us not try to discuss. But first, let us try to understand what the case law is all about. And case law is all about whether there is a service tax liability on construction of a complex service. That is the first question. There are two issues involved. Whether there is a service tax liability on construction of a complex service, that is first. And second, whether some amount is charged towards preferential location, whether on that there is service tax liability. So let us discuss them one by one. First, let us think about, is there any service tax liability on construction of a complex service? And what the court is saying is very, very interesting. The court says when builder constructs the flats and when they are handed over to the customer, basically it is sale of immovable property. Basically the transaction is about immovable property, but certainly it is a composite contract, because in the gross amount charge there are overall three elements. When as a builder I have constructed the flat and I have sold it to you, and for that when I have charged you 1 crore rupees, basically this is a composite contract and there are three elements in this. One is amount charged towards land. Second, amount charged towards goods involved. And third is amount charged towards services involved. To the extent of land, transfer of land takes place. See, when you buy the flat, you don't become a sole owner of land apparent thereto. But how the builder operates, he will purchase the land, on that he will construct the building. When all the flats are sold, then he will make a cooperative society and conveyance of that land will be made in the favor of the society. So when a buyer has purchased the flat, he becomes owner of the flat, and as a member of the society, he becomes co-owner of land apparent thereto. So when he has paid 1 crore rupees, part of that was towards land. Of course, while constructing, builder must have used cement, steel and other construction material which are the goods involved, and certainly there is a service involved, that is construction service. And 66E, that is declared service B, Parliament has created a legal fiction and said that this amounts to service. So as far as constitutional validity of service is concerned, there is no doubt about it. And if even 1 rupee is received before completion certificate, then certainly there is a declared service provided in this. So as far as constitutional validity of 66EB is concerned, there is no doubt. But the next issue involved is finding out what is the value of the service. The court is saying, for example, had it been a works contract, Works contract is also a composite contract, because in the works contract there are goods involved. In the execution of this contract, goods will be involved and there will be service involved. It's also a composite contract, it's also indivisible contract. But how to find out value? The topic has been taken care of by Rule 2A of valuation rules. Rule 2A, you have two options. 2A1, you find out value based on actual method. To A2, you have been offered value is equal to composition scheme. But Rule 2A has no provision when value is inclusive of land value. So, in construction service 66EB, valuation rule 2A will not be able to help. Then what is the option? Abatement number notification 26 of 2012, number 12, where abatement says in this particular case abatement will be available of 70% and value will be 30%. Now the court says abatement or circular cannot decide the value. In other words, the court is saying that yes, construction service, there is in the construction contract, there is a service involved and there is no doubt about it, and it's constitutionally valid that there is a service, and Parliament has specifically created 66EB, which says that to the extent of the value, that if the amount, even consideration, part of the consideration is received before completion certificate, then it is declared service, and because of this legal fiction, no doubt that there is levy of service tax. But in the absence of valuation mechanism, service tax cannot be collected, and so there is no service tax liability. Please, because it is very important, I will repeat the conclusion once again. As a builder, when I constructed flat and when I handed over to you, basically it is a transaction of immovable property, but basically it is a composite contract. In this contract, land value is included, goods value is included, and service value is also included. Parliament has, by creating a legal fiction 66EB, has declared that if part of the amount is received before completion certificate, then entire contract will be considered as declared service and it is constitutionally valid. There is no doubt about constitutional validity of construction service. There is no doubt about that. But the problem is how to value it. Like works contract, where valuation is taken care of by Rule 2A, which is properly supported by Section 94, here abatement is not value, not acceptable. A circular or abatement cannot take character of valuation, and in the absence of valuation, service tax liability cannot be determined, and hence there is no service tax liability. This was the decision in this case law. Finance Act 2017, now what I am saying is not applicable to us. Finance Act 2017 has made necessary amendments in Rule 2A of valuation rule, and even how to value construction service. That is also now well defined, and this case law, the problem has been solved. But then the problem remains that as of now, for our attempt, and whatever amendment Finance Act 2017 has done, is been done retrospectively. So, no service tax liability in practical parlance is going to change. There is not going to be any refunds of service tax, etc. because Finance Act 2017 has amended valuation rule 2A to accommodate how to find out value in construction service, and this amendment has been done with the retrospective effect. But the point remains, for our attempt, we can say that when it is construction service, constitutional validity is beyond doubt, but in the absence of valuation mechanism, there may not be any service tax liability. That was the first question discussed. The first question was whether there is a liability in construction of complex service, where I already answered that question. Second, if you have paid some amount towards preferential location charges, whether on that there is service tax liability. And here court is very clear. What is service? Service which creates some value for the service receiver, and normally it is intangible. Here, when builder charges some extra amount towards preferential location, like for having a garden facing flat or like for having swimming pool facing flat, and for that some amount for the preference or a particular floor or a particular flat number, lucky number kind of, and for that preferential location some charge has been made by the builder, it certainly amounts to value addition to service receiver, and there is no doubt that it is a service provided, and there is no doubt that on amount charged for preferential location there is a service tax liability. Two issues, very interesting case law, most important and expected case law for May 2017 attempt. Please read carefully. Suresh Kumar Bansal, 2016, Delhi. I have given the material in such a way that point wise you can study this and it will become very, very logical for you. Take this case law very seriously. The next case law is Prashanthi, 2016, Karnataka. The question is whether recovery provisions under section 87 of Finance Act 1994 can be invoked without an adjudication proceedings under section 73 of the Act. The point is very simple. Suppose officer is of the opinion that some assessee has non-levy not paid, short levy short paid, or erroneously taken the refund. Then first officer should issue show cause notice under section 73. So Central Excise Officer, Service Tax Officer, who is of the opinion that some assessee has done non-levy non-payment, short levy short payment, or erroneous refund of service tax, then first under section 73 he should issue show cause notice. You know, if it is normal period of limitation or extended period of limitation, in the amended form normal period of limitation is 30 months and if extended period of limitation is 5 years. But first thing is issue of show cause notice. Once show cause notice is given, assessee will go to Central Excise Officer and will give representation. He will try to explain the officer that he is right and officer is wrong. If officer is convinced, he will drop show cause notice. But if officer is not convinced, Central Excise Officer will give him demand order. Assessee, I have heard you. Whatever you are telling is all stories. Nothing is true. What I say is correct. You have to pay your service tax liability with interest and penalty. Now, assessee has two options. Either he can pay it or he can go in appeal. If he goes in appeal, he will go to Commissioner Appeals. From there, he will go to CSTAT. From there, he will go to High Court. From there, he will go to Supreme Court. If it is classification or valuation issues, High Court is bypassed. But now one example. Demand order is given. It is established that amount is due as per officer, the assessee owes some amount to service tax. Then it becomes amount due to central government. And if assessee does not pay and time limit given for appeal is over, that means it is amount due to the government, then officer should proceed to section 87 for recovery of that amount. I will repeat my point once again. Officer has given demand order, but assessee has not paid. Neither he has went into appeal and time limit for going in appeal is over. Now certainly that is the amount which is due to central government, and for the recovery of that amount, officer will start recovery proceedings under section 87. Alternatively, assessee went up to Supreme Court and Supreme Court gave decision that amount is due and still assessee is not paying. Now still officer will start recovery proceedings under section 87. Under both the situations, section 87 recovery proceedings can be started only when it is established that it is amount due to the government. In fact, if you read opening line of section 87 or title of section 87, the title is recovery of amount due to central government. So first you have to issue show cause notice, establish that it is, give opportunity of being heard, establish that it is amount due to central government, and then only recovery proceedings under section 87 can be started. So that is the obvious answer. The question was The question was whether recovery provisions under section 87 of the Finance Act 1994 can they be invoked without an adjudication proceeding under section 73. I think I have already answered that question. Please read it here. I have given it in points wise. But one exception which I have added as a note that you please remember. If it is self-assessed liability which is declared in the returns, then giving show cause notice procedure is not applicable. The point is very simple. If assessee has self-assessed his service tax liability, he has declared it in the return, matlab assessee himself has accepted that it is amount due to government. There is no confusion about that. When there is short levy, short payment, non-levy, non-payment or erroneous refund, there is a possibility of confusion and there is a possibility of dispute between department and the assessee. So the procedure of show cause notice is required because you have to determine that it is amount due. But if it is self-assessed service tax, section 70 subsection 1 talks about self-assessment. If assessee has self-assessed his service tax liability under section 70 subsection 1 and he has declared that it as his liability in his return, and if still he is not paying, now officer can directly proceed to section 87 and the procedure of section 73 is not applicable. This issue is not discussed in this case law. So I have given it at the bottom only as a note. Please read Prashanti 2016 Karnataka. Next case law is Kunj Power Projects 2016 Allahabad. It is very important case law. About this case law, after this case law, one circular was issued, which is circular number 19606/2016, which was issued on 27th of July 2016. In my amendment lectures, you will also study about this circular. But basically, let us try to understand the case law here in the case law lecture. What is the issue involved? Can the order directing the provisional attachment of property be made without giving an opportunity of being heard to the assessee? Please understand, officer has started proceedings under the act. He is of the opinion that there are some dues from the assessee. At the same time, he is worried that by the time the result comes, assessee will siphon off the assets. In the interest of the revenue, can officer attach the assets of the assessee provisionally? That is the question. And the answer is given by section 73C. Let us read that section, the important provisions, where during the pendency of any proceedings, Central Excise Officer is of the opinion that for the purpose of protecting the interest of the revenue, it is necessary so to do. He may, with previous approval of the Principal Commissioner of Central Excise or Commissioner of Central Excise, by order in writing, attach provisionally any property belonging to the assessee. Once it is attached, there are some other sections written there that once the property is attached, it can be attached only for 6 months. In a particular case, Commissioner can increase that period, but under no circumstances provisional attachment can be for more than 2 years. But one point made loud and clear is that it has to be done with previous approval of Principal Commissioner of Central Excise or Commissioner of Central Excise. Also, provisional attachment of property rules have been made. Here, what I have presented is Rule 3. What is the procedure for provisional attachment? First step is the Assistant Commissioner or Deputy Commissioner who is of the opinion that property should be attached shall make a proposal out of it and he should forward it to the Commissioner of Central Excise. Then Commissioner of Central Excise should consider the issue, and if he is of the opinion that attachment is required, then he should give 15 days notice to the assessee. In that notice, he should give description of the property to be attached and he should offer opportunity of being heard. Having heard that, then subsequently he can attach the property. That is what is written in Rule 3.2. I am reading Rule 3.2 for you. The Commissioner of Central Excise on receipt of proposal as specified in Sub-Rule 1 or in his own motion. So, Commissioner himself may think necessary to attach, or officer may send a proposal. Both the options are possible. So the Commissioner of Central Excise, on receipt of proposal as specified in sub-rule 1 or on his own motion, if he is satisfied that circumstances of cause justify provisional attachment, may cause service of a notice of such person on such a person for provisional attachment with reasons for initiating the action under these rules and the details of property to be attached provisionally, giving an opportunity to such person to make submission in this regard within 15 days of service of such notice. Procedure is there, opportunity of heard is to be given, notice is to be given, 15 days notice, and appropriate authority to do this is the commissioner, not assistant commissioner or deputy commissioner. ACDC, who is of the opinion that property should be attached, should make proposal, forward it to the commissioner. Commissioner will go through that proposal. If he is of the opinion that property should be attached, he will issue notice. In the notice, he will give details, the reasons, opportunity of heard will be given, period of 15 days will be provided, and if the commissioner is satisfied, then property will be provisionally attached. Coming back to case law. Can the order directing the provisional attachment of property be made without giving opportunity of being heard by the SSE? And obvious answer is no. You will have to complete that procedure. After this case law, CBEC has issued a circular, and in that circular they have advised the officer to strictly comply with the provisions of section 73C and rule 3 of provisional attachment of properties rules. That is the case law, Kunj Power Projects 2016, Allahabad. Next case law is Gopal Saha 2016, Kolkata, and strong reasons to believe this is also very important and expected case law. The basic question here is whether prohibited goods and smuggled goods is one and the same thing. That is the first question. And second question, penalty payable under section 112 small 1, whether it is payable on smuggled goods. That is the question. I will repeat, whether smuggled goods and prohibited goods are one and the same thing. That is one question. And second question, penalty payable under section 112 small 1, which is it payable on smuggled goods? What SSE was saying is like this. SSE is saying that smuggled goods and prohibited goods are different. What makes goods prohibited under this act, under Customs Act, or under any other law for time being in force? Some prohibition is declared, some notification has been issued, and some goods have been declared as prohibited goods. They become prohibited goods for the purpose of Customs Act. So, prohibited goods are different and smuggled goods are different. That is the argument of the SSE. As far as revenue is concerned, revenue is saying smuggled goods means what? You have not followed certain laws of this country and improperly you have imported goods. That tantamounts to prohibited goods. So, smuggled goods and prohibited goods is one and the same thing. And then section 112 small 1 penalty should be equally payable on smuggled goods also. In the support of their argument, department has given one case law, Om Prakash Bhatia 2003 Supreme Court. Basically, please understand, Om Prakash Bhatia case law was not about penalty. It was about confiscation of goods. Please understand, 111, section 111 deals with confiscation of improperly imported goods, and 112 is talking about penalty payable on certain goods. Please understand the difference once again. Section 111 is talking about confiscation of improperly imported goods, and 112 is talking about some penalties. First, please understand, Om Prakash Bhatia was not about penalty, it was about confiscation. So, it was under section 111, and there the judge said that confiscation of smuggled goods also will be allowed, because that is the mischief which is tried to be covered under the act. So provisions of section 111 when it comes to confiscation of the goods should be interpreted literally, should be interpreted liberally, and even smuggled goods can be confiscated. But that argument of the department is rejected by the court. Court says when it is penalty, the provisions of the act are to be followed literally and strictly. So he said, let us read what is written in section 112 small 1. In section 112 small 1, we are talking about penalty payable by the importer in the case of goods in respect of which any prohibition is in force under this act. Very loud and clear, 112 small 1 penalty is attracted only in respect of, in case of goods in respect of which any prohibition is in force under this act. The court is saying when it is confiscation, looking at the mischief of the act, the word can be interpreted literally and even smuggled goods can be confiscated. But when it is penalty provisions, words are to be taken strictly, interpretation has to be literal and strict. You have to take it words as it is. Penalty under 112(1) is only on prohibited goods. It cannot be put on smuggled goods. That is the case law. Please read case law number 9, which is the last case law, Gopal Saha 2016 Calcutta. Because of the complexities, it is important case law. I think I have made my point very clear. You will find same thing discussed here in my summary. These are the 9 case laws which are applicable for RTP May 2017. As usual, material is available in the download section, and again 2 kind of material is available. One is the detailed material and one is summary. I think I have done a wonderful job and my summary is more than enough. But in a particular case, if some student wants to understand the case law fully and he wants to go through all the details, the summary, the detailed material is very much available in the download section. Thank you very much and all the best.